Good morning, folks. It is January 27th, and this is Nadex Morning Analysis. My name is Todd Rich. I'm with Nadex. With me, as always, is Brian Caprice from Keep Trading Simple. Before Brian and I jump into some hot spots in the markets today, and we definitely have some hot spots, I need to share that trading involves risk and that any trading decisions you make are solely your responsibility and at your own risk. And it's important to note that this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes only. Now, today, I'm going to tee this up. Probably what we're going to talk about most is right up front, and that is all the U.S. equity markets right now are down 1%. That is the NASDAQ, the Dow Jones Industrial Average, the S&P 500. And I think, and here I'm just going to make this we'll put Brian's picture up there before I flip it over to Brian. But really the story today isn't as much about pandemic, which is always a story. It's constantly in the background. Or stimulus talks, because that is also always in the background. But we are right in the heart of earnings season. And so now we're getting a glimpse into the books, into the numbers on how all of this is playing out with companies and how that's really impacting the economy. So while the market is one thing and the economy is another thing, that market does track future performance of what they think is going to happen with stocks. And right now we're getting a good look at what's going on with some of these stocks. And I think we can be part of it. Could be maybe the numbers aren't nearly as good as people are expecting. The second thing could be is people could be in a little bit of a risk off situation with the uncertainty. So interestingly enough, a couple of the FANG stocks, Facebook and Apple, I know are both for sure reporting numbers later today. This is going to impact the NASDAQ. So let's take a look at the NASDAQ, and then we could talk about ideas on how people might want to either play it today or think about, setting themselves up for later in the week.
Okay. Yeah. I mean, that's obviously going to be the big thing. We've seen a huge crash so far in the NQ in the overnight. And again, very violent action. And again, whenever we see these parabolic type moves, we're typically looking for reversals. Now, looking at, kind of a different headlines of things, there's not too many crazy headlines out there that aren't just kind of nothing like concrete where I would say it's fundamental news. It is more just kind of, a news headline here or there. A couple things to point out, as you mentioned, Apple and Facebook are going to be absolutely huge. Apple has a lot of control over what the NQ does. People are expecting there to be good results today. And again, that may be why some of this is being pushed down. But I think it's definitely something we need to talk about. Facebook also is supposed to have great fourth quarter earnings. Again, more people are home, more people online using Facebook, advertising, revenue and things like that are up. And then couple those things with, I guess, yesterday, actually, I guess as of the 25th, the new coronavirus cases dropped to 133,000, the lowest since November 15th, as vaccines are rolling out. So a couple different headlines here that should all technically be very, very positive. Now, when we see these kind of different factors getting involved, it's not unlikely to see a very, very big drop in price, like the exact opposite of what you would think to happen. Because think about it, if you want to buy something, and I think I mentioned this in the last education summit we had, when you something, do you want to buy it when it's really, really expensive, or do you want to buy it when it's on sale? And the answer is on sale, correct? So this big push down could be in preparation for some type of a bottoming, as well as kind of a launching point higher. And again, if we get Apple earnings that blow it out, again, the NQ, there's no reason why this can't just go crazy going higher. Now, there is a level that I want to kind of mention here, and it's a level we've talked about on an hourly. We've seen, price data kind of bounce off of it in the past, and buyers have stepped in, and we had this large spike down on the 25th that kind of messes the analysis up. But then on the 30-minute, you can see that it not only came back up again, but it kind of reestablished. Let me move the 30-minute there. It kind of reestablished. Let me give I forgot that you guys can't see my cursor. It kind of reestablished a level right here where it shot all the way down, which again typically invalidates this level, came back up, base, and rallied higher, and then bounced off that level again. So it's kind of a curious area. We're right around 13,400 right now. But down here at 13,328, really down to I don't know, down here to 13, like 275-ish. There are buyers that are down in that area. They've helped us. They've stabilized. They've pushed higher. So this is one potential reversal today. The big question is, right now there's crazy things going on with a few different stocks that are up like over 100% in the overnight. They've been in the news for a few days. GME, AMC. There's a couple of these small ones that have just been going crazy. I guess Elon Musk made a couple tweets last night, and that has, I believe it's GME, just going crazy. Yeah, GameStop, right? I mean, again, we're in the age of the gamer now, right? Can't get graphics cards for another 2 years. Everybody's into games now. But very, very big news, obviously. As that news dissipates now, right, I do expect this to go a little bit lower. The question is, can we get a stabilization and a basing around this 13,328, really around this 13,300 area? Psychological level, got a couple zeros in there, but this could be a potential bounce point, as well as down here at 13,100. That's the last time, and I'm going to bring it back to an hourly. You can see that's the last time, whoops, not that big, I just wanted the middle. That was the last time we really had any just consistent level of basing, and then the last kind of explosion. So really, the 1300 over here at the, the 13,100 area, and then again, I mean, I don't know that we can get all the way down here to 1290, 12,900. But that could be another one. If we have just an absolutely dismal day, that could be a big setup. So those are 3 different levels that I'd be looking for potential bounces with, again, and I do expect Apple and Facebook's data to be pretty good.
Right. Let me flip up. And here's the thing with some of these stocks. I mean, GameStop, we know that it's a massive short squeeze. The short interest is 120% of the float.
Yeah. It's kind of crazy.
So you've got an interesting situation there where the economics of it all aren't making any sense, but you've got a market situation where shorts are being forced to cover, and then with people playing in the options market and getting leverage, it's just.
And one thing important to note about that, again, to the education summit, what did I tell you guys? We talked about the evil people, right? The mutual funds, the hedge funds, the big banks. Well, guess what? They're the one that are stuck in the short squeeze. So their size is what's making this go absolutely crazy. And a lot of people see that as a disadvantage, that they're so big and they have money, but now they're stuck. They can't get out. The short squeeze is against them. They're losing billions of dollars now. And the little guy is the one that's going long, making double, triple their money every day right now, because they're playing against the big guy, and the big guy's stuck. He's the beach whale right now. So
I mean, that's one. And two, as we come into this earnings season, remember the numbers could be really good, but they could be off of what people are expecting. And so there's always that concern. What is it that people are really expecting, even though the numbers might be good to us, or you might look at it and go, wow, that's really good. But if the market was expecting something entirely different, the floor could fall out. So
expectation of reality.
Right. So when it comes to short-term trading right now, there's a lot of risk, particularly in some of these indexes, particularly in the NASDAQ, when you've got all these earnings, because you really don't know how people are going to interpret it. And a great way to take advantage of these short-term moves are in Nadex markets. What I'd like to look at here, I mean, we're right at this level that Brian had called out before. Binary options, again, how could you play this? What do you think is going to happen? I mean, we're going through. I mean, look at how many strikes we went through today already. 1, 2, 3, 4, 5, 6, 7. We're down here at 8. I mean, this thing can move all over the place. And when you look at that, the opportunity today in some of these, if I can get some of these prices up here, I mean, you could see how some of these out of the money ones up above, there's 4-to-1 ratios, or even better than that. If it were to really bounce back, then again, you've got things down below. If we don't hold some of these levels, I mean, we've got the second level. Look out below. I mean, we've seen some very dramatic. I mean, look at this spike. These downside spikes could get very dramatic and very emotional. So binary options is one way to play that. I thought I would just for fun, just to let's take a peek. I haven't looked.
Yeah, that's what I have on my other screen right now, would be the knockouts.
With the earnings
coming, with the earnings coming after market close today, binaries will be out, unfortunately. So it's one of those things that if it's during the day or one of those economic news releases that is during normal market hours, we're good. But because this is afterwards, that's why I'm kind of looking to see where this will stabilize. See if we have an end rally. And again, if we have that do they rally? That could be one of something that has a longer duration that has, again, couple days left. So again, a knockout is typically, again, there's a couple really nice, attractive knockouts right now, but that level is just a bit lower if it pulls down. So there's some.
So if you're looking for that bounce down below. There's some knockouts that you could take a look at where you could go long. Conversely, I mean, again, everyone's got to make their determination for themselves.
Yeah.
If there is a total washout, there are opportunities to take a short position. Again, defined risk, defined reward. If you think this, I mean, look out to the downside. There's ways to potentially play this with, limited risk, limited reward, either direction.
Yeah,
either direction.
I was gonna say, and the knockouts where they are right now, if you feel like it's short, they're in pretty decent spots. If you wanted to come down a little bit and try to play the earnings play later today, again, there are levels below in the knockout. So again, it's one of those times where a lot of the knockouts really match up well with technical levels, and it's something that, again, if you guys are new to knockouts, try it and demo. But I think it's definitely worth taking a look over there and seeing if something matches your trading strategy.
Yeah, and these knockouts are weekly contracts. So this contract won't expire for 2 days and 7 hours. So this is one where you could take a position potentially and still participate in this movement, but in a defined risk, defined reward way. The NASDAQ knockouts are all, it's a $600 spread. So exactly if you're risking 200, you can make 400 because it could go to 600. If you're trading something for $400, it could either go to 0 or 600. So exactly, and we calculate on the order ticket what your potential maximum loss and maximum profit if either one of the boundaries of the knockout are touched. But this week, with the volatility that we're seeing, particularly in the U.S. indices, knockouts could be an interesting way to play these markets. So I know that's what we want to focus on today, because that's going to be the story of the week. We are in the heart of earnings season, and we're getting a glimpse into companies' balance sheets and income statements and cash flow statements, and the markets are probably going to make some moves.
There are some weekly binaries. So, I mean, there are some weekly binary positions, guys, as well. If you're looking for something to, break above, there's, some interesting binary opportunity in queue as well.
All right. So what I would like to, I know that we want to go back quickly because we've seen a couple, we've been calling it out, the pound dollar in gold. And we've been kind of coaching people along. Hey, take a look. And it's been some pretty good opportunities if you've been paying attention. Let me flip this over to you.
Flip it back. So if you guys can see this is the level that we've talked about for the last week and a half, this 137.56. And as you can see, again, I have this light blue area here marked off. That light blue area is the European session. So again, we had a big rally up yesterday in the European session. I marked this off that we said here was the European start, 60 pips in an hour and a half. It continued to move 106 until the U.S. Open. There's your movement session. Here was your flat session, and then bam, here was the European session start again. And what happened? We had a total of about 78 pips in 3 hours. Okay, so a lot of movement, very, very fast again, and it came right off that level we talked about, 37.56. Now, what can you do with this today? Now that, again, the dollar market is stepping back in, we may have a little bit of basing here, but really for me, I'm going to keep that, keep that area up top on my radar. Again, that is sitting up here at 137.56. It's the same one that if you look to the left over here, that we've been talking about literally forever. But right now, 136.56, 36.22. I'm sorry, 137.56, 136.22 to the downside. Right now, there's a little bit of a hiccup in this middle area, and again, we may flat. But I think if we can push down or up again, I think either of those two areas are probably good levels. But hopefully you guys were able to take advantage of them. Here's those shorter duration binary contracts that you can take advantage of. And again, a lot of movement really fast. And even on the 2-hour basis, it was about 40 pips. So a couple strike widths to the downside based off of the European Open. So again, learning point, European session. If European session is the big mover, we tend to have kind of a slow US and potentially Asian session. And then we retrace, and bam, it's basically doing textbook right now. So that's kind of keep your radar on that. I would say there's just too many setups right now. If anything, we get a base, maybe a little bit of a retracement back up as we get weak dollar for the rest of today. But like I said, I think most conservative way 37.56 and 36.22. And then again, if you want me to jump to oil real quick, we do have oil inventory report today.
Let me look at that one. Yeah, let me. Let's just flip this over here. I just want to kind of show it.
Yeah,
and it is rather interesting. I mean, I've got just the lines drawn, but the parallels and the moves during European hours, um, it's the same move down that we had before,
Hmm.
that we had now. I mean, literally the same move, just in a slightly different price because the U.S. Had rallied it during U.S. hours. Then we chopped sideways. European moved down. You might be looking for a bounce again. Binary options could be a way to take a look at that.
Hmm.
Let's go back. I know you wanted to talk about oil because we've got
Yeah,
the
just real quick because
inventory
we
report.
mentioned it yesterday, and again, we have oil inventory report at 10:30 today. We're expected to have an additional surplus of 1.6. Last time they were off by a lot. It was expected to be down 1.2. It was positive 4.4. And again, not necessarily the best thing for oil. Now we are kind of poised higher, but we do have an administration that's very kind of anti-oil. So again, if we have another one of these big numbers and we are expected to have a surplus, there could be some movement to the downside. Here's the chart from yesterday. If you guys attend session, we were sitting right here, and I said this is a probable bounce point. As you can see, we did bounce up, came back to where the sellers were yesterday morning, and pushed right back down. So we're sitting in that same level right now. It is not as fresh as it was yesterday. It does put us into an interesting period. Again, all the movement again from 53 all the way down to 52, really where we are now, 52.40. This 60 cents drop happened in the UK session as well. On a purely technical basis, again, we would be at an area. If this was 10:30 in the morning right now, I would say, hey, this is probably a pretty decent long, just because we have a area of demand where buyers have stepped in, and we have a news release. So again, there's going to be a heightened sense of needing some movement. But right now, the move may have already happened a little bit too. May have already happened. But again, 53.60, 51.55 are my two targets. If we have a big miss, remember, oil can move $1.50 based off of a very large oil miss. And again, you guys can see it doesn't hit that often. It's more times than not, it's going to be a miss. It's just how big of a movement.
Right.
And again, we are kind of sitting in that middle of the curve. So that's the one thing that we need to watch out for. I would say, I would kind of keep an eye on anything up in here. Like I said, if we have an opening print and we start rallying higher, if we can get up to 53, then yeah, I would say it's probably due for more of a rollover for news. If we just maintain lower here, again, it may be more of kind of a long situation. The way to play this is, because it's at 10:30, go start to look at this around 10:15. Drop this down to say maybe like a 15-minute chart. Look for levels where we have decent basing or decent movement. Right now, this is the best we got kind of down south here, but we are kind of pinched in a little bit up top. So the opening of the market is going to really be what kind of defines this. If we do continue to lower, again, if we follow last week, we could have another big drop to the downside. But again, this week we didn't see the enormous move in the European session. We just kind of saw a slow rollover and putting it back into areas of buyers. So there's a couple different things out there for oil this week.
Yep. And, we've run out of time today. I was going to have us just touch on gold quickly, but you know what? Maybe we'll cover that tomorrow. The interesting thing, if you go look back and look at your gold charts, we've been talking about some levels. It has been sticking range bound. So you can go back and you'll see it is fitting in those ranges.
Yeah.
And if it continues to do that, there's probably some opportunity. I want to leave it at that because we got to get out of here. And I want everyone to have at least 10 minutes to get ready before the equity open. If you got any questions for Nadex, please email us, customerservice@nadex.com. Brian is also very accessible. You can email him at support@keeptradingsimple.com. With that, I want to thank you for joining us this morning. We will be back tomorrow. Have your eyes up today. It's going to be an interesting day in the markets with more earnings. So those U.S. indices are probably going to be jumping, and we will catch you tomorrow. Good luck in the markets, everyone.